Hi everyone, Gaurang Shah here from Geojit. So the buy on dip strategy has been working out for the past couple of months that I've been interacting with you. And I think the events immediately which is unfolding as we speak is the 46th presidential election. And the Democrats are leading as of now compared to the competition that we had seen in the last presidential election. The fight between Donald Trump and Joe Biden, at least as of now, the lead is by Joe Biden. And I think by late afternoon or early evening, we should have much more clarity. I'm not saying that this US elections will have any kind of significant impact on our markets. As I mentioned earlier and last time as well, that it is more of an event-driven impact. It will come and go. That is what I'm trying to say. And who's to say who's good and who's bad? I think it's rather immature to speak about who's good, who's bad. Bilateral trade relationship don't depend upon characters. They depend upon the diplomacy. That's what I personally feel. And I don't think any country in the world can ignore India given the kind of growth rate that we are going to clock and the fast recovery from the so-called epidemic in form of Wuhan stroke, Chinese stroke, COVID-19 virus. We are trading positively and possibly, like I have been maintaining, that maybe by next week Diwali, we may see a little bit of more sparkle, a little bit of fireworks, and we may go beyond 12,000 if everything goes well, both globally and locally. We are virtually at the fag end of the earnings season also of the second quarter. And as I did, gave an outlook second quarter earning, that the earning for the second quarter is going to be in line or better than expectation in some cases. I think that's what exactly has panned out, barring certain small disappointments in one or two sectors and stocks. So now my view is that third and fourth quarter should be even better than what we've seen. And given the unlocking that we have gone into various mode currently with 5.0 unlock, I think slowly, steadily, nation and states will come back to normalcy. And two important triggers that I want to drive home is, first one is the record collection under GST. We have come back to that 1 lakh crore plus level rather sooner than later. And the second one is the auto sales number for the month gone by October. Now there are a couple of views, pent-up demand, inventory pile-up, discounts, long-awaited spree of buying, festive season. You can name whatever it is, but the fact of the matter is that we did record, and lower base effect for the months gone by, etc., etc. The fact of the matter is that we have done relatively better, and that's what we have to appreciate. And given the kind of launches that they have lined up, not in this year because we are virtually at the fag end of the 2020, but 2021. If you actually go to see the commentary from the management, the verbatim from the automobile and both four-wheeler, two-wheeler, commercial vehicle, tractor, etc., all of them have lined up some smart launches for 2021. And if you have to just go by that particular thumb rule, then the auto company expects that the demand should pick up. And that's what even I personally feel, that all the segments in the auto should see some, strong traction in terms of offtake of numbers. Crude oil, Brent, NYMEX virtually trading lower as we spoke, and given the various stages of lockdown in Europe, UK, it remains to be seen how soon the normalcy comes into effect. It is a matter of time. But the view is, and even the International Energy Agency view is that the crude oil could possibly stay in this range only, $5-10 up and down. It's not going to fluctuate more unless until you have some huge geopolitical situation in the global supply pipeline, which of course as of now looks a remote possibility. On the rupee dollar equation, well, I was surprised to see rupee cross over 74 because I was thinking that 74 should be the strong resistance for the dollar to gain strength and for the rupee to get weakened. But 70-40 as of 74-40 as of now. I think again, will be trading with a 50 paise plus minus kind of a range. So 74 and 74.60, 74.75 could be the range, both on the strength and the weakness. On the markets, we are trading very close to 11,900 on the Nifty spot. And my view is that barring, of course, one or two bouts of profit booking, we should again be looking at buying on dips. Couple of stocks I've been recommending for the last couple of interactions that I have had with you all. So 3 recommendations this time. One from the non-banking finance company, more of a remote play, Mahindra and Mahindra Financials. I think the management company was very strong, numbers were excellent, and outlook looks very strong. 145 should be the target on Mahindra and Mahindra Financials. The second one is from the retail segment, a company called Aditya Birla Fashion Limited, target of 190. And the third one is from the FMCG pack, one company which I personally am quite optimistic on as far as growth and earning is concerned. It's called Brokerage Consumer Products Limited, targeting 780. All this, again, like every time, long-term targets, no BTST, no short-term, no medium-term, wealth-creating ideas with a strong earnings track record and possibly value addition to your portfolio. So 3 names, Mahindra and Mahindra Financials 145 target, Aditya Birla Fashions Limited 190 target, and Brokerage Consumer Products 780. And I hope that by the time I speak to you all next week again on Wednesday, the 11th of November, we should be in a much better trajectory with triggers from global and local front supporting our markets. Thank you and have a nice weekend. Bye-bye.